All right, we are live. Let's see, we're live on the socials, live on YouTube, and in person. All right, let's get started. Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. And today I'm joined with my good friend Doug Hagren. Hey, Doug.
Hey, Kirk, how you doing today? I'm
Doing great on this happy Monday morning. How about you, Doug?
I'm trying to keep my eyes awake for it. So I've got family members who used to travel for work all the time internationally. A couple family members that were vice presidents, high top C-level C-suite, and I mean they would go old school, right? Like you'd get up on a Monday and they would fly to Thailand, and then they turn around and fly to another country and then back. And and they do this week after week after week. Now, in fairness, a couple of them developed some pretty interesting habits like smoking and things like that, probably to get through, correlated, just how heavy the stress. But I don't know how they did it. I mean, I just spent 7 days in Maui. We're out there for a conference, and I live in the Midwest, right? So I don't know what we're looking 6 hour difference. But it's interesting. It's not only is it it's a 6 hour difference, but I really feel like Hawaii should be like 7, 8, or 9 hour difference, because it's crazy, even though, because obviously time zones are very wonky, and they're all, they're not really, I mean, there's a lot of like not necessarily a lot of thought that goes into them, but not a lot of equation. Like you've got areas where it's all carved up. So the sunset here in Minnesota, obviously depending on where you're on the time zone, sunset's very different. The sunset here in Minnesota is still like 7:30, 8 o'clock, time-ish, kind of going down. Down there, man, the sun is gone by like 6:30. It's crazy. So it's, even though they're like, I feel like their time zone's not accurate. It should be like 2 hours more to kind of align with the rest of the world. That being said, long story too short, too late. Going east, if anybody's ever done long distance travel, west is one thing. Going east is a whole different story, because now, like, you just accelerated, boom, you get into town, morning is coming right at you. And yeah, it's fight through, push through. Let's get back on schedule. Let's rock and roll. But it's not easy. I don't know how people do it week to week. To those of you out there that travel globally, still, kudos to you.
Yeah, Doug, it's a young man's game, or young woman's game, but I'm not a woman. So I just wanted to be clear about that, just in case you guys are confused. But
you don't even
yeah,
have to. You don't have to declare. You don't have to declare anything these days, Kirk. No one's
that's
judging.
right. I don't have to tell I don't tell anybody. I can just say I will not comment on that at the moment. No, I mean, in all seriousness, I mean, the it's definitely a young person's game. I mean, I remember when I graduated college, it was like the thing to do. You wanted to work for a management consulting firm because you could travel the world. You'd be living in some far off state. Next week, it'd be another state. You just travel around. And I knew people who had literally a closet because they were never there. Like they just had a bed, and a refrigerator and some clothes, and that was it. And they just they were on the road all the time. They were living out of a hotel, and I guess it's great if you want to be a minimalist, but God, that's got to be annoying. You're spending a week in a hotel. You got to constantly figure out dry cleaning, do your clothes. You're always in work clothes. Like it's just got to get old at some point. I mean, I guess when you're young, I remember being young. Like it was fun. Like we were partying. This is back in 2000, I think, is like late night, like 99, 2000. We were going out every single night. We're drinking every single night. We're getting no sleep. I did it for like months and months and months. And every once in a while, you take a night at home, and you'd be like, all right, I got to sleep. But otherwise, like, I mean, I get it. You do it when you're young. When you're older, you can't. And now I hate travel. I don't mind when I'm doing it. I just hate what's leading up to it. It's like, ugh.
Oh, it's so stressful to travel anywhere. Like, I mean, leading up to the day before, I feel like I need the vacation 5 times as much, because I'm 10 times more stressed just getting ready to try to go on vacation when you're managing 60,000 other things you already got that don't stop when you leave, right? And then you got family to deal with. But here's the thing. Some of these people I'm talking about, their C-suite, are still doing this in their 50s and late 50s, late 60s. And it brings me to a segue, and I think that's interesting to think about, is because we have an election coming up, right? And And we already know the current president is not no longer going to be running for reelection. Um,
He doesn't know that though.
he doesn't know that. He actually made a comment. I don't know if you've seen this one, Kirk. He made a comment yesterday. Asked him about the some of the airstrikes, the Israeli airstrikes, and his comment was collective bargain. Hopefully, he's talked to both sides, and hopefully, collective bargaining will solve this. It's done. It's gone.
He's got
But
the answer.
it's at the end. So wrong kind of strike there, Mr. President. But in this case, you have for the first time in many, many years, you have a younger candidate running on one side. But I'm watching her age right in front of me. I mean, you can tell the campaign trail extremely tiring. But you've also got a gentleman running for president that's in his late 70s, and or is he late 70s, late 80s? I don't even know anymore. He's older. So here's the issue of that. I mean, people like to make these comments about how stressful it is for to be president, and they show the before and after pictures. But I mean, you think of it, even when Obama became president, he was in his 40s. He was the youngest, or one of the youngest ever, with Kennedy. I mean, 8 years later, you're in your late 50s. That's prime aging time. And you think about not only the natural aging. So if someone's president 50, they're going to be, they get 2 terms. It's going to be 60s. They're going to age naturally. But also the demands. I mean, we're talking about this travel, constant go, schedule, up early, late nights, on the road, all over the world. Listen, it is a young man's game. And, and now there are many people who are older that still, I mean, what is 60 is the new 50, or now it might be 60 is the new 40, that can handle it. But it takes a special person to be able to live and work a life like that. It is incredibly taxing.
Yeah. I mean, Biden's 81 right now, Trump's 78.
78,
And
okay. So
I think the interesting part about, all this, and I mean, Kamala's 59. So if the interesting thing about all this is, if you think about generations, because I always look at generations, and I actually wanted to get, I think it was Strauss and Howe for the fourth turning. I forget which one's still alive. I think it's Howe. I don't know. But he talks about generations, which I always find fascinating, because you're looking at longer term trends that repeat over and over and over again for the same very reasons. And we're in the fourth turning right now, according to him, and I tend to agree with it. I think he's spot on. I think when he starts to make specific predictions, he tends to be way off. But when he's talking about the big generational trends, he's spot on. And being in the fourth turning, this is, they call the winter, right? This is when conflict happened. This is when all the stuff that's happening normally happens every fourth turning, which is about every 80 to 100 years, depending on how you calculate. But there's a range, but it's somewhere around 80 to 100 years. It's basically every 4 generations. That's the simple way to look at it, right? So, when I was growing up, I'm an Xer, and before me were the boomers, and before them were the matures, is what they call them. But they anyway. But they have these different names. I'm going to bring them back on to actually talk about it, because I'm a little fuzzy on all the naming. But the point is there's different seasons, and different seasons bring different types of things. And so the when you look at the fourth turning, which is what we're in now, there's conflict. There tends to be conflict through society, and generally there's a war. It doesn't mean there'll be an actual war, though. It could be that there's a extended conflict. I mean, we get to a point now where, honestly, we worry about nuclear war, which, I mean, God forbid that ever happens. But
Putin said it the other day, said, you bring them in, I will strike with nuclear weapons. That threat is still real.
Yeah, I mean, if you really think about it, and I know we have this perspective in the U.S., and this will kind of get into maybe a little bit of a piece here, but if you think about perspective, right? We have our perspective. We're biased because we're U.S. centric, right? If you live in France, you're France centric, right? If you're Japan, you're Japan centric, because what right? It's the news you see every day. It's the people you know. That's what you're surrounded by. And you're surrounded by the corporate media of your country, right? And whatever they're saying. Now, I remember going on a cruise back in the early 2000s, and I was in a Baltic Sea cruise, and there was a dinner. I was at the dinner table with this couple from the UK, and just chatting about them. And I think this is when Bush was in. Yeah, this is the Bush years. And I was talking to them, and everybody here said, "Oh, they hate our country. The world hates us." As if we should care, right? And I guess to some degree it matters, but at the end of the day, whatever. So they said, "Oh, the world hates us. The world hates us. The world hates us." That's all we got, bombarded with the media that the world hates us. And so I asked them. I said, "What do you guys think of our country?" They said, "We love the U.S. We love your country. Your people are great. Your cities are awesome. We love your country." I was like, that's interesting because our corporate media always tells us that the world hates us. They started laughing, and they're like, "We don't hate you. We just don't like your president very much." I was like, "Okay, that's a real answer, right? It's nuanced, but it's a real answer, right? Okay." I was like, "Well, yeah, the media keeps telling us that the world hates us." And they started laughing again. They're like, "You silly Americans. You're the only people in the world who think your media are telling you the truth." So all the rest of us know that the media is spitting out propaganda. Every country in the world knows this, except for you. You Americans think that your media is telling the truth. And it's just, I started laughing. I was like, that's very true, right? That is very characteristic of Americans. We think that we're number one and we're the best, and everyone else is inferior, and somehow our stuff is better. I was
Well,
like,
and
yeah,
most and
our
most of
propaganda is
the
better than your propaganda.
and most of the media around the world is state controlled. If you take a
Right.
look at things like the BBC, so they know the government's got their
But
finger on it.
now
We
ours is too.
well, yeah, but we have
According
this
to the Twitter
false.
files, it
Well,
is.
it's not state controlled anymore. It might be Soros controlled pretty soon. I don't know if he's considered a
No,
state,
it's
but
it's federal controlled. You saw the
yeah,
Twitter files that came out and
right,
said the federal government asked to censor certain things. I mean, that's
true.
state control. I mean, it's happening in the corporate media.
Indirectly, absolutely. Yep.
Well, yeah, I mean, it's happening in the corporate media. It's happening in social media. I mean, Zuckerberg came out and complained about it as well a few weeks ago, which is a little bit after the fact. I think he was probably worried if Trump was going to win that he'd come after him. But at the end of the day, I think we have a problem in this country with quote unquote truth, and I think the thing we have to realize there's no such thing as truth. There's only perspective, right? And opinions. Because what is truth? I mean, in many ways, it's in the eye of the beholder. If you look at the left and the right in this example, if you look at the Republicans and Democrats, they can look at the same set of facts and they can come to two completely different conclusions. And you talk to one of them and be like, well, you're looking at this movie and you saw this movie and the other party saw a completely different movie. You're watching the same movie, right? The movie is quote unquote truth. But one side saw one movie. The other side says, oh, I saw a completely different movie. And you're like, what are you talking about? There's only one movie. Yeah, then why are two sides looking at it two different ways? Well, you could say, well, obviously I'm the correct one because mine is the correct side. And the other side is stupid, evil, or uninformed. You know what the other side's saying about you? Exact same thing. Stupid, evil, uninformed. They don't know what they're looking at. That's the problem with truth. So anytime we have these fact checkers or truth sayers or all these things that people say, well, we're gonna be truthers. Every side, both sides, they all do it, right? And it's ridiculous because they all think that they're the police of truth, and they're all wrong. Why? Because we're human. That's how our brains work. Our brains are fallible. We're frequently wrong, but never in doubt, right? Is that the saying? Frequently wrong and never in doubt. So as we're going to this election, and we have 1 month left. This is the end of the quarter. We're going to talk about this a little bit. We're at the end of the quarter. We have 1 month left before the election, and I wouldn't be surprised if we don't continue to see the same shenanigans and BS that we've seen in the last month. I kind of want to go take a nap for a month and come up when it's over because it's ridiculous. Although I kind of do see, I want to see the vice president debate. I know that's your Walls is from your state, Doug, but I kind of want to see that. But anyway, but the point is I think we're going to see a lot of BS. None of it's going to be true. Some of it's going to be really funny, And I think, frankly, that's the only reason I'm watching any of it is because of the humor, because there's no truth out there. Everyone's bullshitting, and that's just the way it is. So, anyway, as we kind of get into take this into finance, we see the same thing everywhere. We see the same thing from Wall Street. We see the same thing from hedge fund managers. We see the same thing from every Tom, Dick, or Harry who's a truth sayer. Oh, I tell the truth. This is what you want to think about for the end of the world. The end of the world is coming tomorrow, and I have the answer, the exact date it's going to happen. You see these all the time. That's why I named this episode. See, what did I name this episode? I came up with some.
I haven't been this
Hold on, here
scared
it is.
since. Yeah.
Yeah, I haven't been this worried since 2020. I'm sorry, 2007. Look, everyone's got a prediction. Now, yes, that is many ways true. I haven't been this worried since 2007. And I remember back then when we kind of just said, you know what, we're out of here. We're done. This is, I don't like what's going on, and we're kind of pulling money and putting it in cash. It was pretty crazy back then. It was crazy in the late 90s. Although that was starting my career, I didn't have the history to know better, but it certainly seemed stupid to me. But people kept investing, and no one cared. And we're going to see the same thing here. Is the market's going up? No one seems to care. People got plenty of money. I just see houses on my street. They're building them, rebuilding them, tearing down like $1 million mansions and putting up a $3 million mansion. And it's like, this is ridiculous. And that's in the environment we're in. Nobody seems to have any fear at all about the market. Nobody, you look at they started raising interest rates. No one cared. We had a bad year in the markets. Oh, well, the markets went back and we're at all-time highs. It's Alice in Wonderland. And so I do want to talk about inflation in a minute, but I want to give Doug a chance to talk as well. You have to realize that everyone's lying to you, okay, including me. And I'm not doing it deliberately, but everyone's lying to you. It's either deliberate or non-deliberate. If it's deliberate, it's for a purpose. Like Wall Street's lying to you because they want to sell you something. They're gonna tell you whatever you want to hear so they can sell you something. There's a reason they never tell you to sell. They always tell you to buy. Because they make money when you buy. They don't make money when you sell. They want you to keep your money in the markets so you don't pull your money out. You pull your money out, the stock market goes down. You put your money in, it goes up, right? It's what do they call it, Doug? A Ponzi scheme? It's not a
Earl
Ponzi
Charles.
scheme. Yeah, it's not a Ponzi scheme, but it's in that category. So basically, if you think about it, if everyone pulled their money out, the stock market would crash. So they don't want you to do that. So buy. That's all they want you to do. So my point is people are always lying to you about investing. And sometimes it's accidental. Somebody might say, oh, I think the stock market's going to crash because of X. Okay, they probably really believe that. They're not technically lying to you. But the reality is they're lying to themselves because they don't know that they can't predict the future. They're just really egocentric that they have all the answers, right? And we all do this. I do it too. So I'm not picking on everybody else. I know I know reality is we all do it because it's human nature. So when you really think about how to look at the markets, how to look at politics, and this is a good lens to look at politics. First of all, don't watch corporate media because you're not going to hear anything constructive. If you listen to MSNBC, CNN, and all these stations, it's all bullshit. It's all supporting Kamala Harris. You look at Fox, it's all bullshit supporting Donald Trump. And I'm not giving a political opinion. I'm not even saying who I'll vote for or if I'll vote. I was talking to a woman from Switzerland actually this weekend at a party, at my friend's daughter's birthday party, and I was talking to her, and I was like, I don't vote. And she's like, what? She's like, you don't vote? And she's from Germany. She freaked out. She's like, I couldn't imagine not voting because this and this is going to happen. And I was just thinking to myself, I'm like, yep, that's how it makes people feel. It's like when you buy into a side, when you vote, when you cast your vote or mentally cast your vote, you picked a side. You can't be objective because you're buying into your team. That's basically what it is. Watching sports, you want your team to win. It's hard not to. It's hard to go there and be like, I don't really care who wins. I'm going to be agnostic, right? You want your team to win. When you vote, you want your side to win, right? You're vested. It's hard to be objective when you're vested in something. When you buy a stock, you're vested. You're vested in that stock. And so it's hard to know, hey, should I sell the stock? I don't know, I really like the stock, and that's what happens to people. They get vested into that stock. I really, really like the stock. I don't want to sell it. I don't want to say bye to my favorite stock that I found. I don't want to sell it. That'd be terrible. There's a psychological game that goes on in all of our heads. And that's why, right? Because we're not objective because we've vested in the stock. And so as you as you run your portfolio, you need to understand that's going on. Oh, I really like gold. You're vested into gold. Gold doesn't matter. Gold's just a rock that we all happen to value. And yeah, it looks nice. It probably look better on your neck or on your ring or somewhere. It'd be better there than sitting in a vault somewhere, but that's what we're invested in. We invest in gold and we sits in a bank vault. We're not looking at it, right? You're not looking at silver. You're not looking at platinum. You're not looking at a company. You just have shares, right? But yet we get invested in something and we get bought in, and we mentally we lose objectivity. It's really hard. You have to really work at not being objective about the investments you have. So just be mindful of the fact that you could take a completely rational and intelligent person, and come election season, they're going to turn into this crazy mess because they're vested in their party that they've decided they're going to vote for, and everyone else is evil, uninformed, or stupid, right? And that's what we're seeing. So I don't even want to talk about politics during the next month. Like, I'm talking around politics, but I'm not talking about politics because it's crazy. And I'm seeing some pretty crazy stuff. And I want to yell and scream at the top of my lungs, but it just doesn't go anywhere. Because then you talk to somebody and they're on the other side and then they hate you. And it has nothing to do with you. I mean, we have the right to have our own opinions, but people hate the other side because they think they're stupid, evil, or uninformed. And so, just be mindful of that come this next month, because you're going to lose a lot of friends if you haven't already, because of the stupidity going on. And frankly, I don't know. It's a whole lot of crazy. So, Doug, what should we pull away from there? And let's maybe try to pull this into the investing realm.
Well, yeah. Well, a couple things I wanted to kind of follow up on. You were talking about Strauss and how Strauss is the one who passed away from pancreatic cancer. Howe is the one that's still alive. You were talking about generations. We've got the baby boomers. Before that was the silent generation. Before that was the greatest generation. It's interesting, by the way, total random thought, but when did they lose creativity? I mean, I want to think about this for a second. Greatest generation, 1901 to 1927. Silent generation, 28 to 45. Baby boomers, 46 to 64. Then Gen X, 65 to 80. Gen Y, which they did get a little creative, called them the millennials, obviously, because of their timing with the millennial. 81 to 88, 96. And then it's Gen Z. And guess what's next? Gen Alpha. Like, when did we lose the creativity? Now it's going to be Bravo, Charlie. I mean, come on, let's get back to making some fun with generations. Now we don't, it's just eventually you're gonna run out of letters. We got 20 more, and then all of a sudden they're gonna have to come up with numbers. Generation 1.
It's gonna be like hurricanes, Doug. They just come up with somebody's name. It's Generation Helene.
Right. I mean, at least come up with something. I mean, now it's just letters, and what is it that started with X? How did they start with X? Now X, Y, Z, A. I'm like, I don't know. Come on. We got to have a committee. By the way, we
should be voting for our own letters, Doug.
There's a comedian, Gary Goldman. I'm gonna have to send this to Kirk so he can post. It's one of the funniest things ever. It's about how the states got their abbreviations. He's an extremely intelligent comedian where he just tells these stories, but they're so funny. But ultimately, how this collective of individuals got together and fought over how to abbreviate the names down to the 2-letter abbreviation that we see today. It's hysterical. I'm gonna have to have Kirk post the video to it. It's really, really funny. Yeah, listen, some of the things that I was kind of looking at, and takeaways. I mean, yes, the politics. I did see something. The last thing I'll say about politics was interesting. I'm not going to say sides because I don't want to be political here, but they did do a survey. It was a pretty sizable survey of individuals who declared that they would have a diverse collective of friends. One side had an extremely diverse collective of friends until they got more educated. And once they got more educated, they narrowed it down to an extremely undiverse collection of friends. The other side regardless of the level of education background, seem to be more consistent amongst the diversity of friends, whether they were less educated to more educated. So there's definitely, one side that seems to be influenced by the more you know, the less you want to be around people. It kind of plays into a lot of what you're saying there, Kirk. Over the next couple of months, not only are you going to get a tremendous amount of polarizing data. I actually wanted to step away when you were talking and go to my safe. I've got a bag of silver quarters that my parents actually purchased back. I think it might have been the 70s when they thought silver was just going to go through the roof. Everybody bought into silver, and then silver just went and did nothing. And they actually, was worthless. Now it's kind of coming back. Silver's rallying, not like gold right now. But you made me think about something that really, to me, correlates to real estate. It correlates heavily to gold and tangible assets. Now, what you were referring to is there's a new term that is out there for those of you listening. You may have heard it. It's called to hodl. And hodling is actually something that was really a term that was created, or it's an acronym really applying to Bitcoin. So when you talk about those that no matter what are going to stay firm to, I'm just going to hold on to it. Cryptocurrency is certainly one of those. Is probably the prime example. And now you are seeing that, gold very much. Both of these, if you put them to, if you want to look at the, kind of similarity between them, both of these are assets that people have argued are things that are going to be stable value, to hold their value, their hedges against the disaster to come. So a lot of times you find the people that do hold on to things like that tend to hold on to things that they think are going to be good no matter what in all economic circles. And ultimately real estate falls into this as well. And when I think about the silver in my hand or the gold bars that now Costco is selling again, that they can't even keep them in. As soon as they hit the shelves, boom, they're gone. This demand for these tangible assets. Now, the one that isn't tangible in this is cryptocurrency. It's treated like tangible, but it is a really good reminder of just the way we act emotionally when we think about purchases. We think about investing. The problem, and I've talked to families for decades about this. Okay, it's scary for me to say decades. It's like I feel like I just got into this again, and now it's been over 20 years. But when you take a look at the decisions that people make around their finances, investing, okay, people look at their house and they think it's my house. It's going to go up, right? And it doesn't. It goes up, it goes down, but they think it's going to go up over time. You don't see that value. I mean, you might get your statement from the county that tells you what the value is. You might go on Zillow, and Zillow has certainly made this easier than it used to be. There's better sources to find out the value of your house than Zillow, but it used to be you didn't know what your value was. You had to contact a realtor, and the realtor would do an assessment and pull some comps for you and tell you, hey, look how you're doing. But you didn't see it. It was out of mind, out of concern. So you held on to it, and you didn't think of it as you might have thought of it as an investment in the back of your head, but you didn't think of it as an investment that you were watching closely, that, I'm going to buy low, sell high, and make sure that I time this right. Gold is, and look at the silver. I don't think about it. It's sitting in the safe. And my father passed away in 2000. That bag has been sitting there since then. I don't think about it. I don't look at it. But stocks are different. And this is something I think that is really difficult for people to disconnect their mind around. Now, I want to go back to one thing really quickly. When I talked about HODL, HODL is an acronym for hold on for dear life. Okay, so that's what it stood for. HODL will be basically come to mean hold on for dear life, long-term vision, never sellers, buy and hold. Just wanted to make sure that I kind of finished that thought on that. But the stock market, one of the things that is really misplayed about the stock market is, unlike all of these other things I just mentioned, and as I said, Bitcoin falls into that, and people I think that are very disciplined on that are holding on to it, even though you see that tangible change, which is why, to me, I think it's a counter to it ever being a productive currency. It's supposed to be a replacement for the dollar. But, if the dollar is volatile, we've seen inflation, we know what happens there. But not to the point where, $1 goes from worth, $5 to 60,000. Okay. When you start treating it like that, you're not treating it like a currency. You're treating it like an asset, which is why, for the most part, Bitcoin has been very correlated to the rise of, to the stock market going up or down, especially technology, because guess what? Blockchain is technology. Now, that may disconnect at some point, but if you look at the pattern of it, when the markets are doing well, Bitcoin does well. When the markets pull it back, Bitcoin has pulled back most of the time, which means it is not necessarily the definition of something that is, a stable value. Okay. But going back to this, when people see their statements, this is where you have to be very diligent about your emotional connection. When you see your statement, say, "Oh my gosh, I have 100,000, or I have 500,000, or I have 1,000,000," whatever your value is that you have between 401ks, other brokerages. And then this is something, I think, for those of you that are fortunate enough to have a higher amount, it becomes even harder, right? Because you look and say, "My gosh, let's say it's $1 million portfolio. I just lost $100,000, or I gained $100,000. I'm doing great." You didn't gain anything, right? It's like the silver in the safe, but you see it. Okay, you see that change. Now, what is that $100,000 gain? And this is where I see people, a lot of times you have to hold their hand. They freak out. $100,000 change. I just lost $100,000. Well, okay. How about the person that had $10? It's now $9. Well, they only lost $1. It's the same thing. It's 10%. Okay. So the more you have, the more you're going to swing. And that's something a lot of people, because a lot of people that have a higher net worth have built that higher net worth through just diligent saving. Okay. Not necessarily getting a big windfall of money. So they're not necessarily of the high net worth mindset, although in the definition these days, you are you are absolutely affluent. If you look at the expanding division of wealth, which we can certainly get into and show, again, at a later time, the divide is increasing. So if you have $1 million, congratulations, you are absolutely in the top percent. But you may not, because you've built it over time, you may not necessarily see that in the same type of psychological capacities as someone who just got $1 million, right? Or built a business, sold it. And so you see these shifts and you realize, "Oh my gosh, I lost $1 million. Well, back when you had $50,000 and you only lost 5, it didn't bother you. You have to remember that percentages and dollar amounts, okay, the dollar amounts are going to change significantly. And by watching it, it can be creating both euphoria and stress that is completely unnecessary and very different than the assets that we talked about, that people hodl. So again, why is this important to know? Because when you look at your statement, don't get too greedy and don't get too excited by what's going on with the market runs. Also, don't get too fearful when they pull back either. Now, you still need to be diligent. You don't want to be holding on to Woolworths all the way into the basement. Or I'm trying to think of the stamp company. Every company used to have those stamp machines. Pitney Bowes, right? Great dividend for a long time. They're basically spitting out their assets and dividends because they become obsolete. So there's a difference. We talk about risk versus volatility, but a big, massive swing of value and volatility doesn't necessarily mean that you've had a big change when you look at the percentage. You have to understand now that you're going to have bigger dollar amounts. But the other thing is what are you getting sold on? What is that emotional trigger? When you pull up your account, look, how am I doing today? It's the worst thing you can do. And it might make you super happy, might make you super sad, but it's the worst thing you can do. Because what really matters when you look at the line item in your statement is look at the quantity. You're buying more quantity. A real estate person thinks, how do I buy more houses? How do I buy more apartments? How do I buy more assets? Okay. More so than the value. They realize they're buying those monopoly pieces. That's what you're doing too. The value is irrelevant to you. What is the value? It looks like you've lost money. I've lost $100,000. That's the problem with statements and brokerage. Let's simplify it down here. Let's say it's 3M and it's $100 a share. Now, you've got buyers that are out there on Wall Street and you got sellers out there on Wall Street. And they're making these deals. They're crashing at the stock exchange. They're saying, "Hey, what does it look like is going to be the next 3 to 6 months outlook for 3M?" Awesome. So the buyers want more of it. And the seller says, "I got this at 100," and the buyers want it. And they say, "Okay, I'll give you 105. I'll give you 110. I'll give you 120. Boom. It just moved from 100 to 120. That is a 20% shift which is going to look great because then it goes, well, do you hold 3M? Look, I have 1,000 shares of 3M. I just made 20% on that. I made $200. Wow. No, you didn't. The people that bought and sold on Wall Street made that. And what they did is to replicate what you could have had you been a buyer or seller. That's what your value is today. The shift tomorrow, let's say the 3 to 6 month outlook for 3M just tanked, right? Well, guess what? Now they say, now there's all these people who want to sell. Nobody's going to pay top dollar if the outlook's down. So now they're offering 80. Oh my gosh, you went from 120 to 80. Look, you lost $40. Now the math on that's going to be more than 40%, right? So it's a massive reduction there. But guess what? It's probably a little less than 40%. But the point is, you see that shift on your statement. That's just what other people are doing. Look at the quantity item. Look at the HODL. Look at the assets you're acquiring and continue to think about acquiring those assets. And don't look at the value, which is irrelevant to you, that swings back and forth all the time based on buying and selling decisions other people are doing. You have to look at those brokerage statements the same way that someone would look as if they're holding on to that tangible bar of gold or that bag of silver or your house. Okay. If you're not planning on selling it right now, the value is irrelevant. And it really is irrelevant to you because it's actually a price that other people have exchanged, not yours. I just think it's important to talk about it. And you just kind of made me think about that when you talked about holding stuff, because the way they put that statement in your face changes the mindset and changes the decision-making that many people do on a day-to-day basis. So as Kirk turns it back to some of the things he's seeing here, so I'll hand it back to you, some of the reasons for, again, to, even if you are super worried, even if you're super euphoric, even if you're taking a look at the politics and thinking, oh my gosh, what if Trump gets elected? He's going to do all this. By the way, people, he was already president. So, we already have a little bit of an idea of what he would or wouldn't do. Harris, a little bit as well, even though, again, as VP, she doesn't have the control of Biden. But the point is, don't get freaked out by any of that. Hold still, take care of your family, and remember to continue to go back to the diligent, basic guidelines of saving well, controlling your spending. But that brings us back to where we are right now, because there is not much control on spending anywhere. Back to you, Kirk.
Yeah, no, thanks, Doug. Yeah, I just wanted to touch on some things that I was saying last time, which is the fourth turning. So there's 4 cycles. There's the high, which is the first turning. The second one's the awakening. The third one's the unraveling. And the fourth is the crisis. The last fourth turning was World War II. Another fourth turning was the Civil War. So we tend to, these tend to gravitate towards conflict. And I think we all feel it. Now, whether that happens or not, I'm not going to say it ends up in. I know a lot of people like to say that it's going to end up in war because it gets headlines and gets clicks. I'm not going to say that. I will tell you that it feels that way, and I think the media is doing a great job at whipping everybody into a frenzy. Because honestly, if you don't watch the media, you're not going to feel this. This is largely media driven. If you really think about Doug was just talking about Trump, and frankly, this is something I really object to. I'm not picking a side here, but I have to point out, and this is where I talked about the 2 movie theaters, right? People say, well, I just saw a video of Hillary talking about, well, Trump would be the end of the world, and I'm like, well, he was president for 4 years, and we had no wars, no conflicts that he started. He's probably the only president in, I can't even remember when, who didn't start a war or a conflict. It's been a long time since we had a president who didn't start one. He didn't. So if you think he's going to end the world, the probability is a lot lower than everybody else we've had in the last 50 plus years. So I think this is where you have to take a step back and say, well, why are people lying to me, right? They are, right, on both sides, right? And I'm not picking a side. I'm just saying this is an obvious case of somebody saying, well, he's got his button on the nuke and he's not rational. Really? Because we had 4 years of him. You know what you're going to get. You may not have liked, and I think what it comes down to is people don't like his brash nature. They don't like his, the words he used. He's uncouth. They don't like the fact that he's not polite. I think that's really what people don't like. It has nothing to do with his policies. They just don't like that part of him. So I would just say, look, we have two presidents, one of which we've seen before. We kind of know what we're going to get, right? And then we have another president, potential president, who we haven't seen before. We kind of seen her because she's been I mean, who knows who's pulling Biden's puppet strings, but it's probably not her. But she's been around, right? You generally know probably where she sits. So, is the world going to end if one or the other wins? It's not going to end. You might not like the policies. I think there's actually a lot at stake at this election because not because of the politics, but in large part because of all the major issues that are happening, like AI. AI is going to be a very significant change in our culture, in our economy. And we'll talk more about AI, but it's a really important technology that's going to change things. So you need to have a coherent policy around that because it's something that could be unlike anything we've seen before. Now, people always say that, and so I'm hesitating when I say that because I feel like, well, everyone always says that, even with the printing press. They said it will end humanity because people will have the books for free or cheap or whatever they were saying. People freaked out about that, and people are freaking out about this. But this is a little bit different. So I'm a little reserved when I say it'll be different, but I do think there's some context in there that'll be very different that I don't think we're prepared for. Much like social media, we weren't prepared for that either. And that is, I think we're going to come out probably in like 10 years and there'll be lots of lawsuits against social media companies, much like there were against tobacco companies, in that people said, oh, well, smoking's good for you, right? Or like, opioids, oh, they're good for you. We're going to approve those. And now there's huge lawsuits. I think the same thing's going to happen with social media because it's really not for children. It is really highly addictive and it's a problem. So who knows what's going to happen. But anyway, point being is we weren't ready for that because technology moves so fast, we didn't have time to adapt. AI is the same way. People on the cutting edge don't understand where things are going. So I don't know how Joe and Susie Lunchbox are going to understand it if the people in the weeds don't. Anyway, so I did want to touch on a few things, and I'll have to go over inflation next time. So I got a few emails saying, hey, when are you going to talk about your next paradigm? And I was like, yeah, I'm getting back to that. Every week I feel like something comes up and I can't talk about it. And I had part of it I was going to talk about this week, but Doug did all the talking this week. So anyway, we're gonna get to that next week.
Sleepwalking,
Yeah.
sleep rambling.
Yeah, sleep rambling. Yeah. Well, I will say next week we're gonna get into it because this is the end of the quarter. So today is the 30th, September 30th. And as of, I think, tomorrow, the next Tuesday or Wednesday, I think Wednesday, Wednesday. No, is it Wednesday? Anyway, sorry, tomorrow. Tomorrow is the 1st, October 1st. So this is the last day of the quarter. And so I expect the markets to, they're not up now, but I'm sure they'll end up strong for the day. And then we'll see what happens in October. And for all of you who think, oh, well, September's over, everything is fine. Yeah, it's the end of the quarter. Let me just tell you something. If you don't know this, you need to know it. If you're looking at timing to get in, timing to get out, the end of the quarter is a wonderful time to consider your timing. Here's why. At the end of the year, there's tax loss selling. If at the end of the year the markets are down, some assets tend to be down a lot more. They keep going down. Why? Because people are selling them to take the loss. And then they can buy it back later at a better price. So some of the best times to buy, if that's happening, is like December 1st, right? So then you can buy it January 2nd. I'm not sure if that's over 30 days. So, you could do your tax loss selling. You bought it, if you sold December 1st and bought January 2nd, that you could do your tax loss selling. A lot of people do that. It's a great time to do tax loss selling, right? It's the end of the quarter or the end of the year at the same time. Now, end of the quarter, also, right now, this is the end of the third quarter. Well, why is the market going so high? Well, let me give you a suggestion. It could be because all of the hedge funds are doing their quote-unquote tax loss selling. It's not really loss selling, but they're doing their portfolio rearrangement because this is a big time for hedge funds. right? This is when they publish their, holdings. This is they publish their, a lot of them publish their annual reports. This is a big time for hedge funds. So if you're trying to dress up your portfolio, they call it window dressing, by the way. If you're going to put in your window dressing on the portfolio, then you're going to want to make yourself look good. What are the best performers? Let me buy all of that. Nvidia's done well this year. Let me put Nvidia in my portfolio. Oh, crypto's done well. Let me put some crypto in my portfolio. Right? They're going to do that because they want you to say, "Oh, you own this. You did really well this year. You were really smart." And it doesn't matter if they own the most garbage stocks, or sometimes they don't want you to know what they own, so they'll move stuff around. Point being is what they're going to do is they're going to window dress it up at the end of the quarter. That's today, which means tomorrow's a new day. It's a new quarter. It's a new year. And it could look very different, which means you could get a lot of swapping things around. And so I would be really careful about making any sort of predictions based on the last month and saying, oh, we're at all time highs, we'll be fine. I don't know what the next month's going to hold because with politics, frankly, with a party in power, they tend to do things to stay in power. Oh, well, what happened with, pretty much most Republican candidates, except for Trump, but most Republican presidents in the last few decades? Oh, things aren't going well. Let's start a war. I mean, that was the playbook. That was the Republican playbook for decades. Things aren't going well. Let's start a war. People want to support a war. They're going to rally behind us. They want to be patriotic, right? The Republicans did that. Now, whether it was by coincidence or whether it was designed, it seems to have happened over and over again. Trump's the only one who didn't do that. But everyone else has done that. That's the Republican playbook, right? Democrats do other things. But right now, things are so manipulated, you can't trust any government data. I don't. Maybe you want to, but I don't want to do that. So I'm looking at this and saying it's the end of the quarter. Now is a time to be really careful about your portfolio holdings and what you want to own and what you don't want to own. I'm going to share a few charts, which I thought were really interesting, and then we're going to wrap it up here in the interest of time. So I'm going to talk about, where is it here? And I know Doug was just about to tell me I'm not sharing my screen. Thanks, Doug. I'm reading your mind. All right. So we're going to share a few stats here. First off, 30-year fixed mortgage rate. It's right around 6. It's a little bit above 6, depending on what your FICO score is, but it's right around 6. It's down from right around 8. Huge drop. It's great, right? Huge drop. It's not as low as 3 or 2 and change, but you're just around 6. It's actually down a little bit since then. So if you're looking at this chart and you're thinking, hey, now's a good time to buy a house, maybe not. It sounds like the Fed's going to keep lowering rates. So you might want to hold on to your money for a little bit. However, it is interesting to note because all of a sudden it's gotten a lot cheaper to buy a home. And also, if it gets to the point where in the 5s and maybe the 4s, I think you're going to see a lot of people putting their houses on the market that were waiting when it was up here because they thought they'd get a better price. The problem is when you have a 2 or 3% mortgage and you own a big house and then you sell the house and you buy a new house and the house is a 7-8% mortgage, you have the same monthly payments if you buy a house that's half the price. So why buy a smaller house when you could just keep owning the big house for the same price you'd pay for the smaller house? That's part of the problem. That's why a lot of people haven't moved. So you might see this musical chairs, this rotation going on once you get into the 5s. And so it's just something to watch. Also want to point out real median household income just keeps creeping higher. Share of U.S. homeowners are mortgage free. I saw a stat come out yesterday, and same number. This actually came out from last year. But the share of U.S. homeowners, they're mortgage free. A lot of people are paying off their mortgages. Right. And as baby boomers retire and downsize, they're not going to have a mortgage because they're going to build up the equity and they use that and they'll have no mortgage, which is smart. Right. But over time, more and more people are mortgage free. Right. Which is great. But also, these people will never have to move because why would you move and get another mortgage payment? Doesn't make sense. So it's an interesting stat to keep in mind is that we keep going higher and higher. Right now, it's 39.8 for all you audio viewers. 39.8% of homeowners are mortgage free. And that's owner occupied, by the way, not just rental properties. This is the share of renters spending half their household income on housing as of last year. It's 25.6%. If you look in Florida and California and then Baton Rouge, it's about a third of the country. Um, they're spending about a third of renters are spending half their household income on housing. Now, let me actually just point something out, because I know banks have gotten a little bit loose of the purse strings as of late. Not quite like the 2007 era.
You don't
Yeah,
say.
not like 2007, but they are getting a little bit loose. And here's the thing: when you are buying a home, they have a metric. It's somewhere around a third of your income should go to household expense, if you will. Right, about a third is their marker. 30, you could argue maybe 33%. Now they make room for like first time home buyers. They do other things to allow people to do more, but about a third is the marker of what it should be or what has been in history. Now, if you look at ninja loans, it was whatever you want it to be. But when you have half of your household income is spent on housing, a third of the people, that's dangerous. That's really dangerous, because that means half of everything you earn goes to paying for your house. Well, you have half the amount to spend on what? Food, clothing, educating your kids, like everything else. Like, that's historically, that's not good, right? If you had 2/3 of your money, that's historically normal, which means a lot of people are tight. They're going to keep getting tighter. Means probably fewer people are going to be buying iPhones. They're going to be buying the cheap version or the SE of the iPhone, but they're not going to be getting the latest brands or the latest brands of anything. I'm not really picking on Apple, but it applies everywhere. So just something to keep in mind. If you look at flyover country, that's where you're getting the lowest. You're getting in the 20s, in the teens, high teens, and 20. Des Moines, Springfield, Missouri, Winston-Salem, Wichita, Arkansas, Ogden, Utah. Uh, Also, yeah,
Okay.
yeah,
Can I add something real quickly on that? Just really quick. I saw a post where someone was talking about two friends. One sold a $30 million company. So they have 30 million liquid in New York, and they feel like they can't keep up. Another family had $3 million and just moved to, I believe, I don't think it was Des Moines, but somewhere right there in the Midwest, and they're living like kings. So, there's a real impact of that difference of cost of living in those areas, and how far. And I think this goes into some retirement planning decisions that people need to make, and what's going to be right for you. But if you're concerned about having enough money, there is you can definitely stretch your dollars a lot further depending on where you make your residential
yeah,
decisions.
and it's a good point, Doug. And I'm going to mention this, and we're going to flip through these quick because we're over time. But I want to mention this, that Doug's point's valid. Is if you think about what's happened since COVID, a lot of people moved out of California because it's too expensive. Also, because quality of life, they moved to like Nevada, they moved to Lake Tahoe, they moved to all these like cool places, they moved to Montana. Now I'll tell you about Montana because I've been there, and it's crazy. Like, you go to like Bozeman, it's like Boston. It's like a cool place. College kids, it's like lots of money, and the economics are very similar to Boston, which is hard to believe because there's nothing in Montana outside of Bozeman. It's a college town, but it's cool.
Some friends of ours, just lifelong
It
dream, just moved out of
It's
Minneapolis
cool.
to
Like,
Bozeman.
and I'm not taking it away from Bozeman. It is a cool place. It's a great place. I enjoyed being there. However, there's not much outside of Bozeman. It's like empty. It's like cattle land, right? So Montana has always been this frontier economy when it comes to real estate, right? It's just lots of land, not a lot of wealth. I mean, the wealth is tied up in the land, but asset rich, cash poor. So there's not a lot of wealth in Montana. However, a lot of Californians moved there and they brought their wealth, which boosted up the economy and made things a lot less affordable for all the people in Montana. So that's part of the problem. When you have these the coasts where everybody's earning lots of money, and then they move somewhere else, all they're doing is they're taking their problems with them, and they're causing some, because if everyone moves to Montana, all of a sudden Montana is going to be a really expensive place to live because the economics, right? It's where you bring in money that didn't exist. All of a sudden, there's more money. You throw it around, people can charge more, and the economics rise. It's kind of like what we have with minimum wage. When minimum wage goes up, it raises the bar for everyone because everyone's got more money. So it causes price to go up, which means that you're not making any grounds by having minimum wage higher. And that's the argument, right? People say, well, they should be paid more. Yeah, they should, but I mean, that's what supply and demand is around. So that's a different argument for a different day. I'm going to flip through this. One thing to note is China has started to pop. The stock market has started to go up. It's interesting to note in the last week, it's done very well. Um, Although people have shied away from China outside of that because it doesn't seem to be a safe place for capital internally or externally. And so external capital coming in or internal, people are shying away from being entrepreneurial because they're afraid of the government confiscating or putting you in a re-education camp. India is another one. Even if you look at China, India has skyrocketed in the last few years, and it's something to note. We're not going to spend a lot of time with it, but India is a great economy with a ton of potential, and it's done very well in the last few decades, and I think it'll continue to do well, albeit it'll still be a rocky environment. We talked about that. Let's see. Emerging markets, according to history, and I'll just say that according to history, the end of a Fed hiking cycle tends to be positive for emerging markets. Yes, that tends to be true. However, what also tends to happen is at the end of a hike cycle, the U.S. tends to go into recession, which also can cause rocky or problems with emerging markets. So emerging markets are kind of a tough place to be. I would steer clear unless you really know what you're talking about. They trend really strongly. If they're doing well, they're one of the best performers in the world outside of crypto. And when they're doing poorly, they're one of the worst performings investments in the world. So you just got to be careful about emerging markets. They're very volatile and very risky. Um, and then last is looking at Europe. I will just say that Europe has been this interesting economy for some time. I don't honestly don't know what to make of it because if you look back at Europe, if you look back, I'm looking back months here. If you look back to like 2000, it peaked out and it went down, and it's just kind of gone sideways for the last 25 years. And well, it certainly you could argue that there's some potential because the economics, the fundamentals have gotten better. At the same time, Europe is a stagnant economy for many reasons. One is population, which is why they're taking a lot of immigrants, from the Middle East. And that, I know that disrupts a lot of the culture, and people object, and immigration and all that. But the first world countries have realized that they have shrinking populations, and if they don't take in a lot of immigrants, then their economy is going to start to go south. And so that's why you see a lot of these countries doing things that are against the people's will, is because they're saying, well, economically, it's the best thing for us. And I would argue that that's why the U.S. has been allowing it for decades. Republicans and Democrats, I want to be very clear, both parties have allowed it to happen. Trump is the first one that's just said, I'm going to stop it. Now, whether he did or not is a different question, but he's the first one who said we're going to stop it, and made a whole thing about it. And he's right in many ways. Like we have an ineffective immigration policy. We need to have immigrants. Like, let's be honest, we all understand we need more people in this country, and I don't know too many people who object to having immigrants. I think the problem is our policies is screwed up. We don't really have a policy. We just it's really hard if you want to do it legitimately. If you do it illegitimately, it's really easy. But if you do it legitimately, you can't get in here, which is ridiculous, right? You need to have a formalized policy. You need to have rules. You need to allow people to come in if you need them. If you need farm workers, find people to come in, screen them, all the stuff you do, but we don't do that. So that's the problem. And that's why both parties allow it, is because there's a lot of people who feel like we need it, and they're corporations, and they allow it to happen, and they don't publicly allow it because they say, oh, we're going to stop it. And they never do, because they know that if they stop it, it causes problems. So we need a lot of reform in this country. And I don't mean stopping it. I mean, we just need to have rules that we follow, and it doesn't incentivize lying. So we're going to wrap it up here in the interest of time, since we're way over today. Doug, take us home. Where can people find more about you?
Well, thanks, Kirk. Check out mergentcollegeadvisors.com, MERGENT, mergentcollegeadvisors.com. If you're not actively incorporating your college plans for your child, because it's expensive, and so assuming people listening to this might have kids, middle school, high school, Might be saving. 529s are great sometimes, but they're not the best use for everybody. That you might have things that you're doing and actively working on that might be costing you or causing the colleges to charge you more than you would normally have to pay. There's a lot that needs to be looked at. But here's the thing: if you're not actively integrating your college savings strategies with your retirement, you're fundamentally hurting your retirement. Ultimately, every extra dollar you pay to college is going to translate to tens of dollars. And that means every 100,000 you pay to college is looking at possibly $1 million in wealth transfer away from your future. And so if you're doing planning and it doesn't incorporate housing and college, two of the greatest impacts to you financially, then you don't really have a holistic plan. And unfortunately, 95% of advisors out there do not understand and shy away from planning in this area. And if I took that same approach, I'd just tell you to liquidate your retirement and use it for college. And that wouldn't be a really good advice, would it? But that's the approach that many are taking. So if you really want to do this right and you want to add $1 million more to your potential future financially, there's ways to build your strategy for paying for college and pull that money back to supporting your future. Let's talk about that now. Go check out some information, mergentcollegeadvisors.com. Again, MERGENT. And thanks for having me, Kurt.
Thanks for coming on, Doug. Always enjoy the conversation. We're going to wrap it up here. We're going to try to get into the frameworks next week, assuming nothing bad happens, in which case we'll have to pivot once again. But yeah, that's the show for this week. Thank you again for joining us, Money Tree Investing Podcast. My name is Kurt Chisholm, wealth manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on the show. Please remember to subscribe to the podcast and the podcast app of your choosing. You can also check out the show at moneytreepodcast.com. On their website, you'll have access to the show notes, resources, and the archive shows. Also, we're now on YouTube. Please check out our YouTube channel. When you're there, please subscribe and leave a comment. Lastly, please leave a show rating and comment on the podcast app of your choice. Oh, and don't forget, do your own research. This show is for informational use only. We're not telling you what to think, merely how to think about investing. We're also not selling any products or services, so do not consider this advice. If you have any problems with the show, I blame Putin. Please send me an email and express your feelings. If you're seeking financial advice, talk to an oracle, or a fortune teller, or maybe just a licensed financial advisor. I'm one, but as I said earlier, I'm not selling anything. But I'm easy to find. Have a great week ahead, and remember, no one will care about your money like you do. So invest